So many people complained, oh, I missed Nvidia on this huge run. I missed Amazon. You look at those Mag 7 names, those names that lead us higher, and when we rally, those are the names that are probably going to bounce back the most. I look at Nvidia down 25% from its peak. It was down over 30% at one point. They have a big event next week. For a tradable bounce, you get back to the 200-day moving average, which it's below. That's a 10% rally from here.
One of the big questions about this entire sort of space right now is obviously Nvidia making a small fortune because everyone's actually buying with cash those chips. A lot of the businesses that are buying those chips or access to those chips aren't necessarily making money themselves. How long can this go on?
Well, I think what we're seeing is in 2024, there was a lot of experimentation by businesses and consumers. It was really developing a new habit, learning how to use things like ChatGPT. But all of the curves that we see for what we call consumption, as opposed to the training, which costs a lot of money even today, as the models every 18 months improve by another doubling or another order of magnitude, there's billions of dollars that will be required to train the highly intelligent models on the frontier. Right. However, once those models are launched, the amount of demand, ongoing consumption that can happen, that curve is increasing at a much faster rate than the cost of training the new models. So we think over time, those curves are going to cross, and when you get enough consumption for each of these more intelligent models, they're the margins that can be gotten by businesses for doing what's called inference as opposed to training. Those margins look like they'll be sustainable, and it's really about getting to high volumes. And we think that will happen. It takes time for these technologies to get absorbed into the market, and for businesses to integrate them into their current application stacks, for consumers to start changing behavior. So for all of those reasons, though, the front end of that, it looks like a kind of a tidal wave coming in of additional demand and consumption that we're going to see for these technologies. So I think as that curve starts to play out over the next even 6 and 12 and 18 months, you will start to see that the ability to make margin from doing inference on these Nvidia chips is going to be there for businesses that are selling AI.
Nvidia's Jensen Huang has been making extreme moves left and right to save his stock from tanking any further, and it is absolutely working. His latest shocking partnership is with Twitter's former owner, Jack Dorsey. Jack Dorsey's brainchild, a company by the name of Block, has not only taken a quantum leap into the future, but gracefully pirouetted into the spotlight by becoming the premier U.S. company to harness Nvidia Corp's groundbreaking AI clusters. But this is only the tip of the iceberg, ladies and gentlemen. Welcome back, everyone, to Investocracy.
We've got the Super Bowl of semis coming up next week with NVIDIA's GTC event. It's quite possible they give some commentary, some insight into what's happening in 26. But I think for the AI trade, what is absolutely important is, do CapEx budgets go up in 26, and what's their conviction of that? If that's the case, if 26 budgets are up, the AI stocks will all be up.
I was just thinking about end markets, Chris, gaming, auto, PC, mobile, data center. It feels like data center's going to have to carry a lot of water, is it not?
It will, and it does. And again, from the broader space, what you're hoping for is, we finally get this cyclical recovery. And what happened in semis is, post-pandemic, customers just built up way too much inventory. People were just too optimistic. And it's taken 2 years to get to the point where, for example, Analog Devices said in their earnings that we think we're finally through the inventory correction. So if you do get some GDP help, some macro recovery in the second half of the year, well, then you get two benefits. This is always the benefit of a positive semi cycle. You get, improving demand, and then the fact that customers have to put inventory back on the shelves. Auto is another example where some of the tier ones in auto have taken their inventory all the way down to 2 weeks, where 2 years ago they said, we'll never do that again. We'll keep our inventory high. We don't want to get a shortage. And now they've gone the other way. If you start to get some better feeling about end demand, well, they have to put that inventory back into place. And really that's the concern. And frankly, a couple weeks ago, before some of the trade and tariff scares, there was a lot of optimism for that being the case.
What do you think Jensen Huang says at GTC, Chris? And I'm wondering, were there any unanswered questions after NVIDIA's earnings call that you unanswered at this event?
Yeah, so most of what GTC is talking about their particular product cycles. One of the things that was at least a question after earnings was, you didn't see the level of upside in Nvidia's guidance that we've seen in the past. I think they did answer the question. It's about the transition to the new Blackwell cycle, and there's some new products coming out. We're optimistic with that in the second half of the year, and I'm very confident that he's confident in that as well. But what people want to see, the conviction people want to see is, does this continue? And really kind of two things. One is, what kind of ROI are NVIDIA's customers getting on the money they're spending right now? And then secondly, the level of conviction that that spending, the CapEx, is going to go up in 26. That's really what people want to hear.
Are you above or below consensus when it comes to their 25 margins?
Well, we're above with regard to the 25-26 with regard to earnings. For margins, they've had a little bit of a downtick. Again, it's associated with that new Blackwell ramp. So generally what happens with NVIDIA is when they launch the new product, gross margins come down a little bit. Management's guided that to be back up in the back half of the year when the new Blackwell becomes more mature. So margins we're pretty comfortable with.
Investors were met with a whirlwind of excitement as Block Inc. embraced NVIDIA's AI clusters, a move that CEO Jack Dorsey predicts will render systems 30 times more potent than existing implementations. Why, one could say it's like replacing a rusted pedal bike with a jetpack for the first few seconds. Tapping into the enormous potential of NVIDIA's GB200 superchips with configurations known to firepower into the trillions. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
NVIDIA shares are higher today, though still down more than 20% from their record high just back in January. The company getting ready now for its big GTC event next week. Top chip analyst Stacy Rascon of Bernstein here with what you should expect from that. It's good to see you. Welcome back.
Good to be here.
As you look ahead to next week, just let's look at what happened to this stock of late. I mean, how should investors feel about it, the ones who love it the most?
Yeah, so I think I heard in your prior segment, if you liked it before, you should love it now. I've been a little, I guess maybe surprised is the wrong word, but I mean, I've been a little surprised at the magnitude of the decline. And I get it, the whole AI space has kind of rolled over somewhat on DeepSeek and macro and tariffs and just a broader degrossing, and I get all that. At the same time, NVIDIA, I mean, we're right at the beginning of their Blackwell product cycle. It has just started. It is likely to be the biggest product cycle in their history. We'll likely get some more updates on that next week at GTC. We'll probably also get our first look at Rubin, which is the next generation. We may even get a little look at what comes after Rubin. They may talk about co-packaged optics. They may talk about quantum. They may talk about ARM PCs. They'll probably talk about robotics and every physical AI and everything they talked about at CES. I think it still looks really, really good. And at these current valuations, I mean, it went down to 23 times earnings. It's about 25 now. It's at trough valuations. You've been really, really good buying it there, like historically. I think over the last 10 years, if you bought it at 25 times or below, your average one-year return from that moment was like 150%, and it's never had a negative drawdown over a one-year period buying it under those. I really like it at these valuations in the beginning of a product cycle and with their, their conference of the year starting next week. Yeah.
Dorsey thanked NVIDIA's Jensen Huang, celebrating an alliance that spells innovation in bold letters. But what does this mean for the market? Contextually, Block's prior AI undertakings in hyper-realistic audio and deepfake detection already stretch the limelight's edge. The seamless integration of current capabilities with NVIDIA's cutting-edge technologies could amplify the stakes. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We're underweight Amazon and Nvidia, but Scott, we've been talking about buying those. We bought Amazon early this year because it trades at a discount to its history quite significantly. We've been buying Nvidia. I think anytime Nvidia trades to a price level where it makes sense, and we don't own Tesla. And here's the thing. I think everybody paints these with the same brush. These are fundamentally different businesses that get wrapped together because of the way markets are constructed right now. You can buy some of these names very, very attractively given their longer term fundamentals. I mean, Nvidia is cheap relative to its history, assuming that the earnings hold up, there's no competitive threat, there's no threat to exports. But those are the things that the news gives you an opportunity to buy. I'm not just buying the Mag 7.
Well, and Nvidia's got this big event next week, so why not?
I mean, it's hard not to like Nvidia now more than you did at the beginning of the year, right? Stock's down a lot. And what the main data that came out of Morgan Stanley's tech conference a couple weeks ago was everyone said their capital spending plans are still intact. So if I'm worried, which I am a little bit about revenue for other companies in the market, I'm a little bit less worried about Nvidia's. And I guess the relative estimate achievability of Nvidia's revenue is better than I thought, and their stock's down a lot. So sure, I like it more. I get that logic.
So is this a monumental investment opportunity or a fleeting chance to gaze as future market paradigms in AI become today's reality? Jack Dorsey's forward-facing ventures with Nvidia are poised to redefine the AI conversations in stock markets, drawing speculations while pressuring the traditionalists. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.